Hey everyone, welcome back to Corporate Decoder, the place where we unpack the money moves of big companies and sometimes find a few surprises that might make you scratch your head or even raise an eyebrow a little bit. Today we are diving deep into a financial report that gives us a snapshot of a few different funds under the Northern Lights Fund Trust IV umbrella. We are going to be looking at their latest semi-annual shareholder report for the period ending the 30th of September 2025. Before we jump into the nitty-gritty, if you appreciate getting straight insights from these massive corporate documents, then make sure you are subscribed and ring that notification bell. We also have a fantastic Discord community linked down in the description below where we break down these filings and talk about what it all means. So come join the conversation. Alright, so what we have here is a Form N-CSR, a Certified Shareholder Report for Registered Management Investment Companies. Think of it as a regular checkup for these investment funds, showing us what they have been up to over the last 6 months. This particular filing covers Northern Lights Fund Trust IV, and it breaks down the performance and holdings for a few different funds. Specifically the USA Mutuals All Seasons Fund and the USA Mutuals Vice Fund. Now these reports can get pretty dense with financial jargon, but our job here is to cut through that and find the story, the real numbers behind the financial story. We are going to look at the costs for investors, the fund stats, and what exactly these funds have been investing in. First up, let's talk about what it costs to invest in these funds. For a hypothetical $10,000 investment in the USA Mutuals, All Seasons Fund Institutional Class, the costs over the last 6 months were about $102, which works out to 1.96%. That number is annualized, so it gives you a rough idea of what you might expect to pay over a full year in fees and expenses. For the USA Mutuals Vice Fund class, a shares the cost for that same hypothetical $10,000 investment was $94 or 1.73% annualized. And for the Vice Fund Class C shares, it was $134 or 2.48% annualized. Finally, for the Vice Fund Institutional Class, it was $80 or 1.48% annualized. Generally, lower percentages mean more of your money is working for you and less is going to fees. Now let's peek under the hood at what these funds actually own. The USA Mutuals All Seasons Fund seems to be playing it pretty safe. According to their asset weighting, 99.8% of their investments are in US government FONI ARP agencies. They also have a tiny slice 0.2% in purchased options. This suggests a very conservative investment strategy focused on capital preservation. Looking at the fund statistics for the All Seasons Fund, we see net assets of over $18.5 million. They only hold 3 portfolio holdings, which is quite concentrated. The advisory fee net of waivers was around $60,000, and remarkably the portfolio turnover rate is 0%. Zero turnover can mean they are holding investments for the long haul, a buy and hold strategy, or it could mean not much has changed in their portfolio. When we look at the asset weighting for the USA Mutuals Vice Fund, it is a completely different picture. Here we see 100% in common stocks and 0% in purchased options. This indicates a much more active and potentially riskier strategy aiming for growth. The Vice Fund sector weighting shows a strong leaning towards consumer staples at 37.4%, then industrials at 25.8% and consumer discretionary at 21.4%. They also have smaller allocations to materials communications, technology, and real estate. This diversified sector exposure suggests a strategy that looks for opportunities across various parts of the economy. Let's check out the big players in the Vice Fund's portfolio. Their top holding is BAE Systems plc at 8.0% of net assets. Next up is RTX Corporation at 6.4%, followed by Philip Morris International, Incorporated at 6.2%. Northrop Grumman Corporation is also a significant holding at 5.4%. Other top holdings include companies like Alibaba Group Holding Limited ADR and British American Tobacco plc ADR. This shows a focus on large established companies, many of which are in defense, aerospace, and consumer staples like tobacco and beverages. For the USA Mutuals Vice Fund, we see much larger net assets standing at over $55 million. They hold a more diverse 36 portfolio holdings. The advisory fee here was over $181,000, and the portfolio turnover rate is 11%. An 11% turnover is moderate, suggesting they do make some adjustments to their holdings, but are not constantly trading. Now for the really granular stuff, the actual companies the Vice Fund is invested in. Under common stocks, we have sectors like advertising and marketing, where they hold Gambling.com Group Limited and the Trade Desk Incorporated. Then aerospace and defense, showing holdings like AeroVironment Incorporated, BAE Systems plc, the Boeing Company, Howmet Aerospace Incorporated, Lockheed Martin Corporation, Northrop Grumman Corporation, and RTX Corporation. This heavy allocation in aerospace and defense is a major part of their strategy. They also invest in beverages holding Anheuser-Busch InBev Sar ADR Carlsberg, a S-Class B Constellation Brands Incorporated Diageo plc ADR Heineken NV, and Pernod Ricard Sar. You can see they are investing in some of the biggest names in the consumer staples space too. In their short-term investments category, they have collateral for securities loaned valued at over $2.2 million. This is a practice where the fund lends out its securities to others and earns income on that collateral. It is a way to generate a little extra return. They also have purchased future options making up a very small 0.0%. Specifically, they hold one contract on the S&P 500 E-mini 4800 index. This is a way to potentially hedge against market movements or speculate on future price changes of the index. Now let's go back to the USA Mutual's All Seasons Fund to see their investments in more detail. Under US Treasury bills, they hold a principal amount of $12 million in United States Treasury bills maturing in December 2025. This really underlines their focus on US government debt for safety. For options, they have purchased options on the S&P 500 E-mini 6680 index with a notional value of over $13 million. This again is likely a hedging strategy given their overall conservative approach. Let's shift gears and look at the consolidated financial statements. In the statements of assets and liabilities for the Vice Fund, we see investment securities at fair value totaling over $56 million. Cash and cash equivalents are around $700,000. Liabilities include things like payable for securities lending collateral, received at over $2.2 million. Looking at the statements of operations for the Vice Fund for the 6 months ended the 30th of September 2025, we see total investment income at over $745,000. Their expenses before waivers were around $545,000. After fees waived by the advisor, net expenses were closer to $469,000. They had a net investment income of about $276,000. The real meat of the Vice Fund's profit comes from the realized and unrealized gain or loss section. They reported a net realized gain from investments of over $3 million and a net change in unrealized appreciation of investments at over $4.6 million. This shows significant gains on their stock holdings. For the All Seasons Fund on its statements of operations, the investment income was about $381,000, all from interest. Expenses were around $198,000 and net investment income was roughly $183,000. For the All Seasons Fund, the net realized gain from investments was a negative $268,000. However, their net change in unrealized appreciation of investments was a positive $3,000. This means they actually lost money on selling investments, but the overall value of their remaining holdings slightly increased. Let's check out the financial highlights for the USA Mutual's Vice Fund, specifically looking at their institutional class. The net asset value at the beginning of the period was $22.50 and ended at $26.09. Their total return for this 6-month period was a strong 15.96%. The ratio of net expenses to average net assets was 1.48%. Looking at the investor class for the Vice Fund, the net asset value started at $21.81 and ended at $25.26. Their total return was 15.82% and the ratio of net expenses to average net assets was 1.73%. For the class of shares of the Vice Fund, the net asset value went from $21.60 to $25.01. The total return was 15.79% and the net expenses ratio was 1.73%. And for Class C shares of the Vice Fund, net asset value moved from $20.31 to $23.44. Total return here was 15.41% with a higher net expense ratio of 2.48%. This is typical for Class C shares as they often have higher distribution fees. Now critically examine the All Seasons Fund's institutional class. The net asset value began at $26.26 and closed at $28.26. Their total return for the 6 months was a modest 7.62%. The ratio of net expenses to average net assets was 1.96%. This is a bit higher than the Vice Fund's institutional class expenses. Let's talk about the underlying structure. The Vice Fund and the All Seasons Fund are part of the Northern Lights Fund Trust IV. The Vice Fund has been around since 2002 with its institutional class starting in 2014. The All Seasons Fund started in 2017. It is interesting the Vice Fund has different share classes, each with varying expense structures and sales charges. Under the significant accounting policies, each fund values its investments at fair value. This means they try to determine what their investments are worth based on market prices, or if those aren't available, using other reliable methods. This is a standard practice for investment funds. For the Vice Fund, looking at fair value measurements, which is how they value their assets, all of their common stocks and collateral for securities loaned are categorized as level 1. Level 1 means they are valued using unadjusted quoted prices in active markets. This is the highest level of valuation certainty. They have over $56 million in Level 1 assets. For the All Seasons Fund, their US Treasury bills are valued at Level 2, which means they use observable inputs other than just direct quoted prices. Their purchased options are Level 1. They have over $11.8 million in Level 2 assets and about $24,000 in Level 1 assets, with futures contracts also valued as Level 1. Importantly, neither fund held any Level 3 securities, which indicates a lack of highly subjective or unobservable valuations at this time. Under Investment Advisory Agreement, USA Mutuals Advisors, Inc. is the advisor for these funds. For the Vice Fund, the advisory fee is at an annual rate of 0.95% of average daily net assets. For the All Seasons Fund, it is 1.75%. The advisor has also agreed to waive fees until July 2026 to keep total annual fund operating expenses within certain limits. This is a common practice to ensure investors don't get hit with excessively high fees. The All Seasons Fund's higher advisory fee and expense ratio are notable when compared to the Vice Fund. This section titled Control Ownership tells us who owns a significant chunk of these funds. For the All Seasons Fund, LP Financial and National Financial Services together hold about 64% of the voting securities. For the Vice Fund, Wells Fargo Clearing Services holds almost 30% of the voting securities. This indicates that these entities are major shareholders and could have significant influence. It's also worth noting the proxy voting policy section shows that shareholders voted on new investment advisory agreements and ratified fee payments. For the USA Mutuals All Seasons Fund, the vote on the new advisory agreement was overwhelmingly in favor, with over 96% of shares voted and over 50% of total shares outstanding approving it. For the USA Mutuals Vice Fund, the approval was also strong, with over 75% of shares voted and over 38% of total shares outstanding giving the nod. This suggests shareholder confidence in the current management and their proposed changes. Alright, so let's wrap this up with our take. The USA Mutuals All Seasons Fund is clearly focused on capital preservation with its massive allocation to US Treasury bills and a 0% portfolio turnover. This strategy is safe but likely means lower growth potential. The USA Mutuals Vice Fund, on the other hand, is positioned for growth with a large investment in common stocks across various sectors and a moderate portfolio turnover. Their significant holdings in aerospace and defense and consumer staples names suggest a strategy that believes in the long-term prospects of these industries. A key takeaway is the difference in expense ratios and total returns between the funds. The Vice Fund generally delivered stronger returns with lower institutional fees compared to the All Seasons Fund. The Vice Fund's higher equity exposure is what is driving that performance. One thing to keep an eye on for the Vice Fund is the concentration in specific sectors like aerospace and defense. While these are strong sectors now, any downturn in that industry could disproportionately affect the fund. Overall, it looks like these funds are operating as intended with clearly defined strategies. The All Seasons Fund is for the conservative investor, while the Vice Fund is for those seeking growth and are comfortable with a bit more risk. Now, what is your take on these numbers and what they signal for the future of these funds? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And of course, subscribe for more deep dives into the financial world. And hey, don't forget to check out the Discord community, link in the description. Thanks for watching, and we will see you next time.